please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
We have seen a market that had one dash to 10,490, which is the previous high. And then we saw about the first hour of trading largely in the red. Now it's clambered back rather emphatically. Let's get our technical experts to tell us that whether this is the time to go long. Mitesh Thakkar has joined in now. In a bit, we will have more experts joining us. Mitesh, good morning again. What's the trade now? Do you get in even at 10,475?
Lata, good morning. I think, very clearly we are very close to the earlier highs, so not the best entry point in that sense, I would say. Let it get past either 10,500 or wait for a dip which was there early in the morning. I think 10,435 is what I had highlighted as the immediate support. We had a low of 10,440. So around those levels would be a good entry point, and then keep a 25-30 point kind of stop. Look to book out partly at 10,500. If we get past that, then you can stay in your positions.
Okay. There was some news on HDFC Bank with regards to fundraising. In any which way, what would your approach be towards the Bank Nifty at current levels as well as HDFC Bank?
Sonia, I think the HDFC Bank stock, I think, is clearly making new highs, and I'm slightly positive over there. As long as the stock remains above 1860, 1870 zone, which was a difficult breakout zone, I think this is still a buy. I would look at targets close to about 1950 over here. Coming to Bank Nifty, I think 25,750 needs to be taken out decisively for the Bank Nifty to progress further. But again, we should see some supply emerge at the earlier highs, which is close to 25,950, 26,000.
Okay, what other stocks are you trading now, Mitesh?
Yeah, so I have in fact two buy calls. Lupin, I think, and in fact a lot of pharma stocks are showing some reversal today, and Lupin is what I picked up as a trading call. Buy with a stop at 865, look for targets close to 920, 925 to begin with. And Larsen & Toubro is an intraday buy with a stop at 1219 for targets of 1260.
Okay, well, it seems as though Lupin is having a good trading session. That one is spiked up to the top of the list for the Nifty gainers, so it's up around 2%.
So is actually even Cipla. Cipla is also in the last few minutes done as well as Lupin. I mean, I only mean the last 5 minutes.
And Aurobindo as well. In fact, it's been a good couple of days for a lot of these pharmaceutical stocks, but we've seen this kind of flash in the pan rally which has taken place. Let's see whether it sustains beyond that or not. But Mitesh, before we get to the Twitter queries, would you have a view on a couple of these pharmaceutical stocks and the kind of momentum we're seeing on that?
See, as I flagged out, I think Lupin and Glenmark are clearly, on my list. I think the other one which I like, and we had a buy call there yesterday, was Aurobindo Pharma. But the rally has, it's moved up slightly, but the momentum is clearly missing. Maybe once it breaks 700, I think you will see that kind of momentum come in. And that apart, I think, I do like a mid-cap stock called Alembic Pharma, but disclaimer here, I personally own the stock in my portfolio.
Okay.
All right, I think it's time we got the questions from the Twitter channels. This question has been tweeted by Sumit. He has 76 shares of Lupin at 1216, and he wants to know whether he should hold or sell or average. He says he can hold out for a couple of years, 2 to 3 years. Mitesh?
So as I said, I think the trading view is positive. You just heard me on that. But otherwise also, I think that the stock is possibly going through a reversal, and therefore these are good levels to possibly average. For any freshly averaged stock, I think I would suggest keeping a stop loss at about 800. But I think eventually the stock could give a medium-term reversal, which could see price head towards 1050, which is where you can look for an exit.
Yeah, but I think if they spot it at 1200, okay, he has a distance to cover.
Yes, absolutely. That's for Lupin. But the other one and the last query for today, Mitesh, is from Shailesh. He wants to know if Delta Corp is a good buy at current levels.
Vertical rally.
Last 4 days have been that, I think 250 to about 310. So while the long-term charts are very exciting, still very promising, the only advice which I would give is to buy in tranches. So buy 25% here, buy on any 10 to 15 point dip, keep on adding 25%. Keep a stop loss below 250 odd zones, and my sense is that I think the stock will keep surprising on the upside.
The Nifty with a positive bias, 10,478 is where we're at, and Lupin is now at the high point, up 2.5%. Don't know if there's any sort of news on that stock. Nothing was really expected. But nonetheless, 888 rupees currently for that particular stock, clawing back at this point in time. Devan Modi, the director at Equirus Securities, joins in to discuss the fundamentals of the market. Devam, hi, thanks very much for joining in. First, in fact, let's start with pharmaceuticals because that seems to be the sector in focus today. Give us a sense in terms of whether you are currently advising your clients to buy at these levels and which stocks.
Yeah, so yeah, pharmaceuticals as a space remains something which is a slightly tricky thing to comment on right now. However, having said that, they are obviously good long-term businesses lying over there, and so we are typically not yet completely sure of what is happening at the sector level in terms of various movements which are happening. But there are certain stocks wherein opportunities are emerging, especially stocks where we are confident of the near-term momentum, or stocks where there is a larger portion of domestic component or things like that.
Okay, Devam, of all the pharma stocks, you guys like Cadila?
Yeah, so Cadila is something that we are definitely positive on. Now, what has happened is that there has been a recent correction in the stock because of sort of concerns related to the erosion that would happen because of competition in Lialda. Now, while there would be erosion over there, we are very confident of that this erosion will be more than made up by a lot of launches that they are looking at. Like there are major launches across 4-5 drugs and a lot of other transmodal products and all which are coming in. So all of these things should definitely ensure that the company posts a very healthy EPS growth in FY18 and 19.
The other stock which I find quite interesting in your list of recommendations is PC Jewelers. That stock is in fact at a fresh all-time high as well. What do you like about it, and what's your prospect for 2018 in terms of a target price as well?
So overall, basically on the whole jewelry space, we see a lot of positives with regards to the move from unorganized to organized, and various things related to hallmarking, as well as say transactions below 2 lakhs being stopped, and those kind of moves, as well as GST. All of these things will mean that the branded players and the players who are focused on growth and organized platforms will do better. And PCJ has been investing efforts. It is like just as a sort of anecdote, they are probably the largest Facebook following, even more than Tanishq per se, and on social media as well as advertising side, they have been doing a lot of efforts. So all of these we expect it to come through in the form of growth for them.
Okay, and finally, you like Godavari Ispat?
Yes, so Godavari is something, yeah, so it is a typical commodity play. I mean, when the whole cycle is reversed favorably, now suddenly from a negative EBITDA, the entire increase in sales is coming more towards, because there has been a rising spread between pellet and iron ores, and pellet is one of their main products. So their EBITDA per ton on pellets has just shot up. And that whole rise in spread is coming through as operating leverage down to the profitability of the company. So that makes it very attractive. While it has run up a bit, but we still remain confident of a substantial run up from current levels.
It's not a bit, you know, from I think October end, it has doubled, more than doubled since November. That's what, less than a month or 6 weeks. Even at these levels, at 260 levels, you would still think that it can make gains?
Yes, so basically we are looking at a strong profitability rebound. I mean, in this cases, the profitability rebounds, they generally move from being loss-making to a very good level of profitability, mainly because of the price in commodities that gets more favorable for them. So that is leading to a much stronger EBITDA and PAT growth. I mean, the EBITDA and PAT growth is going from negative to, say, plus 200 crores or something like that over the course of next 2 years in terms of PAT. So that is something which is going to boost the re-rating in the stock, and that our calculations suggest that that still leaves more than 80 to 100% upside on the table from a 2 to 3 year perspective.
Okay, all right, Devam, we're going to leave it on that note. Thanks very much for joining in and talking to us. So that's the view coming in from Equirus Securities on certain stocks. Need to take a break now, but up next we're going to be speaking to the management of Lasa Super Generics, which is into the vet API space. Well, we now have with us Omkar Herlekar, the MD of Lasa Super Generics, who joins in on the phone line to discuss the company. Remember, it is the demerged vet API business of Omkar Specialty, which was relisted on the exchanges in September of 2017. Mr. Omkar, hi, thanks very much for joining in. Well, you know, I just wanted to start by talking about, you know, a couple of takeaways from the conference call transcript that was in fact uploaded on the exchanges yesterday. You have described that there is some amount of capex that the company wants to undergo, and that would include incremental process patents which would be filed. Can you just take us through your plans?
No, see, as the company is growing and the unit number 4 is also now commissioned completely, you know, like the trial runs have started. So whatever debottlenecking capex is required, that will be done. So capex will be happening on a proportionate basis, as you have seen in the half yearly, like, you know, H1. Particularly the last quarter you must have seen. So like on the similar run rate, the capex will progress.
Okay, so can you give us some idea about how the revenue growth looks like in the second half?
I think so. Like, so whatever proportionate basis the revenue growth has happened, I think we can consider the same run rate only. We don't foresee any immediate fall in the sales otherwise.
But you've grown only at around 5% in the second quarter, 5 to 6%.
No, ma'am, not really. Actually,
in the second quarter?
On a sequential basis.
No, we have done.
Okay, I meant sequential. I meant sequential. Sorry.
Yeah. So we have almost grown to an extent of 22% in the half. If you compare H1 last year to H1 this year, so 22-23% jump. So that will. So I mean, I am maintaining this since last few years that, you know, we'll grow at 20-25% ke beech mein. So this will be our growth like.
Okay. What kind of prospects do you see in this wet API business? Because, you know, Omkar, you've mentioned that the biggest risk that you have is regulatory in nature. We know what happens with human APIs and human formulations. What kind of regulatory risk do you face in the veterinary space?
See, be it human or be it veterinary, you know, APIs are APIs. They are bound by FDA regulations. And then, you know, complying with FDA regulations is very much needed. Complying with all the certifications to, you know, get proper renewals on proper time, as well as getting new certifications and clearing audits is a very tedious job. So certainly, you know, we, all the companies, like, you know, try their best to, you know, comply to this. However, see, if you ask me what is the risk factor, then regulatory is the only risk factor, as you know, because we are bound by different authorities like FDA, Pollution Control Board, and many others, you know. So regulatory is the only risk. I don't foresee any other risk because the demand is always there. If you are competitive, you will be, you know, always existing to stand in the market as a leader. But regulatory risk is the only risk which I.
How much is your export share?
Yeah, total exports, like, you know, direct exports plus merchant exports put together is around 40% of the sales revenue.
Okay. How often do you see your plants getting inspected by the US FDA?
No, ma'am. We are not registered in US FDA as such. Maybe in future we may go or may not go. But right now we are registered with Indian Drug Agency, and we have filed our DMFs in various countries, which includes Europe also. We also filed CEPs. So the plant inspection of this, you know, the country authorities usually inspect plant once in a year, and the vendor inspection happens almost every 15 days, you know, because there are a lot of MNC vendors who come and inspect as a, you know, protocol. So their inspection happens once in 15 days. Okay.
You have 35% market share in India. What kind of competition do you see, and any incremental increase you're anticipating in your market share at all? Say 6 months, 1 year down the line?
Yeah, as I again just like to, you know, repeat it, which I repeated on the phone call. Like, we are fully backward integrated players in this particular field, and you know, the increase in the market share will certainly happen with value-added services and products to the customers with respect to price, quality, and delivery times, which we are very confident. And very certainly, you know, in the coming years, we will see our market share to increase gradually and slowly, and we will post a very sustainable growth over the upcoming years.
Okay, we'll leave it at that. Thank you very much for joining us, Omkar, with those details. We have to take a quick break. We are back with some interesting comments we got from a litany of CEOs earlier in the day.